All right, good morning, traders. We'll quickly look at gold and quickly see why we think the market is still actually, you know, um, bearish. So this is my charts, as you can see, and we were planning to buy gold from here, hoping that we get into here. And if you look at this whole structure from the higher time frame, you find out that it's actually bearish. All these are choppy markets. And we understand that choppy market usually are when market is trying to make a retracement or a consolidation. All this move from here to here, it's a retracement of this swing that we have here. And currently, we know that from the place where we decided to take an high, like where market made an impulse from an high, let's say from around here to this point here, market has already done 60% Fibonacci retracement. And if we take it from where we have this line here, this is market trying to do 78.6 Fibonacci retracement. So that's why we had this place. And we see there's a fair value gap here. But another thing we saw that made us feel like market may not get to this fair value gap was because if you check closely, if you try to zoom this, you will find out that market had already mitigated this high. Because even a small mitigation is still a mitigation. So if you check this candle, this particular one here, find out the market has already mitigated that high. Let me closely, zoom closely. So looking at this, this is a mitigation. This is like at least how many pips? This is about 2 to 3 pips. It takes 10,000 lot size to move a market by 1 pip. So it might not look so significant, but it is. But because we also understand that if market has not gotten to 50% Fibonacci retracement, majority of the time, um, of the fair value gap itself, it hasn't gotten to the consequential encroachment, so it is still valid. So that was another reason. But another thing market has already done is, if you look at this place closely, market already made something like this. One, that was the first leg, second leg. If you trade ABCD drive, M shape, and whatever, find that the market already made one, two, and then three. So here should give us an opportunity to sell. So when market did this and went up, we thought this would be a failure, and then it came down and it created an order block here. So that's why we sold from around here. And then it went up again, swept this double top with this candle, and we sold again. So both of them hit SL, and it was a massive loss. One thing we did not check out for was, if you look closely, usually when market is making that one, two, three, the last candle would be a sweep. This appeared to be a sweep, but if you zoom closely and look at it very well, you find out that market actually broke above it, which made this other block really strong. And when market got there, but it pushed market up to the upside again. That is the same level that also made this fair value gap also strong, but it was not enough. It failed at some point, I think due to market gap or whatever. But market gap down into this other block, and then smart money executed the trade from there down to this level here. So that thing which we were looking out for, but we thought it was a sweep, is what we are now looking out for here. So if this market appears to just be a sweep of this high, market it will expose the bearish leg, and we'll look for a strong confirmation here. Would have taken the trade after maybe in a small time frame change of state of belief, but because of the loss we had around here and here is the reason why we are now apprehensive and trying to be more careful. Understand? So we'll look for a more stronger confirmation, probably in the 15 minutes. And then zooming into that level, find out that if you look at this level here, this candle made a low, and we're looking at market coming to break this low, or probably even in the 5 minutes. So in the 5 minutes, market already made an impulse again. This is an inverse, this is a fair value gap at the moment. We expect to be an inverse fair value gap where we'll be taking a sell opportunity from later today. But at the moment, as you can see, the market is currently in that zone. Market tried to be bullish again. It failed, and it is still consolidating in that zone. So we expect a break below that zone down to this level, then we can execute a sell. And this time around, it's not going to be a sell where we intend to take um, position from here, where we intend to take a buy position from here. It's going to be a sell that we hope or we see breaking this low to the downside, or at least getting to this level here. There's going to be a really strong sell, at least getting to this level here, possibly covering. We won't be looking at this gap anymore. We're looking at this gap now. So we're looking at taking the market from here to here. So now we'll cancel this and cancel this, and we're going to have an opportunity to sell very far into this zone. So once that happens, we'll put our stop loss a little bit above this high, and then we sell down into this zone. Today is also Wednesday. Usually Wednesday, not every time anyway, but it's a day to also look out for midweek reversals. You understand? So midweek reversals might be coming soon. So you see this other block here. This is the last bearish candle. It's untapped. So we still expect smart money to get into that level. This other block here, the focus of this other block, because this is the last candle that I made before this breakout here, should be this week. And this week is far bigger than the body. So that is why we are considering it. You understand? And we tend to sell towards this line into this other block. So this is us trying to make about 5,809 pips on this trade, helping us recover from the loss we had here. And yeah, I think we had 100 and something pips and 100 and something pips as well. So let's zoom in again. Let's see what market is trying to do. Will this be an opportunity for us to enter? But we'll see that later while we are waiting for a confirmation. So looking at what market is also doing currently, if market is already trying to make a steady base or that block like 1, 2, 3, 4 has been established, and the market broke below the steady base or that block, see this candle. So from this point now, we can decide to sell from here. Yes, we can decide to sell from here. So this is a steady base of that block, and market went into the zone. Maybe if this one is able to make another high. Now if you go to the 1 minute, you might be able to see another high or a sweep above this high. A sweep above this high that would engage our sell downward. So we'll take a sell now. We'll take a sell now. And then we look out for taking TP at this place. So this trade risk reward ratio is 15.7. All right, guys, wish you a successful trading day. This is what we currently have for gold, and we hope it works out just as we've said. Bye.